Hello, guys, and welcome to day 2 of our bootcamp series for our smart money concept liquidity sweep strategy bootcamp. So, today we're going to be going over identifying highs, identifying lows, identifying trends, and what a liquidity sweep is. So, make sure you've got your pen and your paper handy, ready to take some notes. Let me just share my screen for you all now. Allow share screen. Let's get you straight on to the trading view chart. Fantastic. I'm going to stop my video. Now you've got this on. Brilliant. So you can concentrate fully on the trading view chart below. Okay. So as we are in Brad Hunter FX Smart Money Concept Liquidity Sweep Strategy Bootcamp, Session 2, identifying highs, lows, trends, and liquidity sweeps. Okay, so I'm going to get rid of that. So, after viewing the first session on day 1, your charts should look very, very similar to this. You're currently on the 5-minute time frame. Okay, you've got your favorites tabs here. You've got your dark background, if you like that, with your XAU USD chart here. So what we're going to go over today, guys, is how to identify highs and lows in the market, identifying trends, and then looking for our liquidity sweeps. So on any chart, guys, whether you're trading indices, commodities, just normal Forex pairs, stocks, shares, all that sort of good stuff, you're going to have highs in the market and lows in the market that you need to identify yourself to start making decisions on entries inside of the markets. So what we're going to do today, guys, is start looking at how we're going to identify this. We can take our trend line tool. What we want to be looking for, first of all, is a high. What I mean by a high is a ceiling and the low is a floor. So let's start with this point here. We're identifying that this area here is a high in the market. Let's put a little line there. That's a high. Okay. What I'm going to do, I'm just going to write on here high. So you can see on the call that there is a high created inside of the market. What am I going to identify next? A low. So the most obvious low on this chart is at the very, very bottom here, a low. So you got your high and you've got your low down here. Okay. Let's mark that up as a low inside of the market. So now you've successfully identified a high in the market and a low inside the market. So you've now identified a range from high to low. Let's move across. We've got another low here. We've got another high here. Okay. Very, very simple. That is how to identify highs in the markets and lows in the markets. I'm going to move on to how to identify trends because we can use this to identify our trend now. So what we've got our high up here. Let's have a little look at throughout the market. What have we got here? We've got another low here, look. Got a new high here. Rates come down, created this low, come up, created this high. Prices come down, created this low. It's then come up and created this high. Okay. So on and so on. Okay. But these internal lows and highs are called something a little bit different, which I'm going to explain to you now. Let me just finish marking these up, just so you can see where the highs and lows are inside of this range. You've got your main high here. and your main low just here. Okay. So what you've got here, what we call these areas, okay, we have got a high and then a low. Okay. We've then got this new high here, but it's not the ultimate high. This is the top of the mountain peak. This here is called a lower high because it's a high, but it's lower than the main high. Does that make sense? Okay, lows. We have now created a lower low. So we've got our high, our low, our lower high, and now our lower low. So those of you that are on this call, what do you think this is? If that's a lower low, what do you think that is there? Absolutely bang on. That is another lower high. It's a high that's been created, but it's a lower high. Okay. Lower low. Lower high. See where I'm going here? Okay. Highs, lows, lower high, lower low, lower high, lower low, lower high. And when you get lower lows and lower highs, that means we have found what we call a downtrend. We are trending down, creating lows, creating higher lows, lower highs, sorry, and lower lows. That there is how we can identify a downtrend. What I'm going to do now is move across and how we can identify an uptrending market. Let me just rewind it. Okay, here we go. So, what have we got here, guys? We've got our low. Got our low. Look at this up here, look. Bit of a squiggly line, but it's okay. I'm just trying to get through it a little bit quickly for you. Got a high. Okay. So what else can we identify now? We've got a low here. We've made a what have we done? Made a high in here. Little high in here. We've got a new low here. I'm going to do a few of these just so you get the gist. Got a new high. Low. High. Low. One more. Okay, two more. High. Oh, that's not good. High. Low. Okay. Right, these are called slightly different now. So you've got your low and you've got your high. It's very important that we can identify these guys because this is how you're going to identify what trend in market you are. So we've got a low, got a high. So we've got a new low here, but this is called a higher low. Higher low. It's a low, but it's higher than the ultimate low. This is the ultimate low. High, low, high, higher low. So what do you think that's called up here, guys? If that's a higher low, what do you think that is? That's a higher high. Higher high. It's a new low, but it's a higher low because it's higher than this low. Low, high, higher low, higher high, higher low. You know it. Higher high. Higher low. Okay, one more, higher high. If we're creating higher highs and then higher lows, that means, guys, we are in a uptrend. Uptrending market. So we've got our uptrend where we're creating lows, highs, higher lows, higher highs, higher lows, higher highs. That means we're trending upwards. It's called an uptrend. Move across for our example over here. Okay. We've got our high. We've got our low. our lower high, lower low, lower high, lower low, lower high, low. That is a down trending market. Okay. As I said, guys, in the previous video, you can watch this back as many times as you need. All right. Screenshot it, save it, do everything you've got to do to make sure you understand exactly what it is we're looking for here. So on session 2, we've been able to identify lows, we've been able to identify highs, and now we've been able to identify trends. We can now identify what a downtrend is and what an uptrend is, all in one video. The last thing I'm going over with you on this day 2, guys, is how to identify a liquidity sweep and how we know it's a liquidity sweep and not just a new lower low. Okay. I'm going to show you now. I'm not going to mark all these up. I'm just going to mark up these last few. So we have identified that we are in what, ladies and gentlemen? We are in a downtrending market here. Okay. So we've identified we have lows, we have lower highs, we have lower lows, and we have lower highs. Okay. And then what price does, zoom in a little bit, and then what price does, price creates this lower low here. Okay. But as per before, we've created a lower low here, made a lower high, and then made a new lower low. But in this instance, guys, we've not continued our trend going down. So where we're doing this before, guys, lower highs, lower lows, lower highs, lower lows. If we continue the trend, it would make a new lower high before continuing further down. But it hasn't. It hasn't. What it's done instead is what we call a liquidity sweep. It has taken these lows and then pushed aggressively to the upside, creating what? A new high. We've got our lower highs. We've not created a new lower high, otherwise we'd be underneath. We have swept liquidity and we have pushed to the upside to create a new high here. And what do I mean by liquidity? Liquidity is an area in the market where a lot of people and institutions will have their stop losses, okay, or additional orders. So what you'll find here, guys, is where prices come down and started to move up, a lot of people would have their stop losses under here. So when you see a pound sign, it means there are stop losses and liquidity in that area. What price has done? It has swept our liquidity here, taken out all of these stop losses, which are underneath this range, and it has now pushed aggressively to the upside, creating a new high inside of the market. Again, a lot of information on day 2. Be sure to watch this back, okay? But that wraps up today's session. Session 2, we've identified lows, highs, trends, and liquidity sweeps inside the market. Be sure to come back tomorrow or jump over to session 3, which should be the next video along, that shows you how we identify break of structures and how we're going to set up the Fibonacci tool and how we're going to use it to find entries inside of the markets. Have a great rest of the day, and I'll see you all on the next video.